Drinking dope turned me to a superhero.
Yo, Bueller here again, and today we're going to do the same style video as we did for SPY, but for Apple. We wanted to stream that next day after getting, that video did so well that I was like, alright, I have to make more of these. Bunch of requests in the stream. People were giving me Apple, Tesla, Microsoft, Caterpillar, a few other tickers. So I'm going to make a few more of these videos, and I'm going to slowly start to put them out, but yeah, let's just get into this though. So today we're going to get the levels for Apple. We're going to do the bigger time frame and the smaller time frame. I think I'm just going to go ahead and start with the bigger time frame, and then we'll go down to the smaller. So let me make sure I'm on it. I am. So make sure to definitely take advantage of this drawing setting. It's definitely super helpful. Going from bigger time frame, and then you go down to here, and it's like, oh, I got different levels. You know, it's so helpful. Let's go to the monthly. And on certain tickers, and you'll see this, I'll show the difference if y'all want. But we have a few charts that I would prefer to do on the monthly, and then we have a few I'd prefer to do on the weekly. It just kind of depends how many levels are there. This one seems to be fine, though. Zoom in, pull it down so we can see what we're doing, and then fill up any big halfway points. So there's a huge range between there, so let's add that halfway point to give us another good level in between. Technically, you could do another one from this halfway point to this candle here again, and then do another little in between, since that range is still very big. And you've seen me do this before on like Tesla and all kinds of tickers that have just huge rallies on the far left sides of their chart. But super helpful. So we got those done there. We could probably add a few more, to be honest. Yeah, like between here. Like, it doesn't seem that big because you're sitting on the monthly, but if just read the numbers, because, like, of course, 137 to 146, that's a huge range. So we need to add something in between that. This one's not as bad, but I'm just going to do it for example's sake, because it's just really good for practice. Anytime you have a large range, to add those halfway points. That's all you're doing. Don't make it any more complex than that. That's all you're doing. You're just filling up the range. And technically, we could do that little method there again where we add one here and here, but I'm just going to move on for example's sake. And then you can see there, we're pretty much done on the daily. We really don't have to do much more. A big thing to look out for when you're looking at these time frames, and I'll link the flash cards link or whatever it's called, the candlestick pattern flashcards in the link of this bio, which I think I put it in a couple of the videos now. But essentially what you want to look out for is for good bases, you know, looking down here. Okay, they made a low here at 124. They couldn't break it here on the inside day. They couldn't break it here again. We got a single soldier pattern popping up with rising volume. We essentially just need to break over this area and hold 129s to continue higher, and you can see they ended up doing that. And it's vice versa too. You know, if it's like, oh, we're at a resistance, we seem to be having trouble here at 151.80s. If we can't pass this, we're not moving up higher, right? You end up getting another lower high, and then you get a bearish kicker. This is a big indication that, hey, we're probably coming down soon, because you've got one rejection, two rejection, and then you got a bearish kicker popping up saying, hey, there's a large amount of sellers stepping in, so you might want to get into shorts or get out of longs, you know, whatever your plan is there. But also, not even just for swing trading, it's very important just for analysis, you know. So going into today, you know, for Apple, without today's candle being here, you should instantly be looking at this as like, all right, we either push up and hit 146s and try to push higher, or we pull back and we try to test 141.38s and push lower. You know, so there's two plans in front of you. It just gives you good awareness of what's on the chart. And this is what I use to help me out on the bigger time frames, especially for SPYs, you guys saw in the other video, which y'all should check out if you haven't seen already. That video did very well. Thank you guys again. I cannot thank y'all enough. And now we're going to go down to and that one's a lot quicker because there's not as many levels to grab. There's not as much to look at. But here on the smaller time frames, there's a lot more to get. So make sure you go out to the max daily and you make sure you're on the far left of the chart. Always on the far left of the chart. So pretty much I'm not really focused on current price, but I do want to note where it is so I don't have to start too low or finish too high. So I'm going to start pretty much from here. 120. Alright, so emerging candle. We have a very large range between those emerging candles. It's at a halfway point. Delete the fibs. Anytime there's a red candle, I'm not looking to mark it. I'm just putting my cursor next to it, because if this was over this green candle, I wouldn't mark this green candle. But since this green candle finished higher, I can mark it. I'm not looking to mark red candles. Same thing for this. I wouldn't mark that. But I do need to pay attention to it. Because if you put your cursor over it, you'll see, oh, we're over that green candle. That doesn't count. Okay, now I'm just clicking everywhere. Put your cursor there again. Oh, still too high. The next green one is right here. So we need to fill up this range, and then we can move on to the right. Alright, so we got that one. And every time you grab these fibs, you're going from the last candle to the next candle. You're never going backwards. You're never going from here to here. You're always going in order. It's very systematic. remove. All right, so we got that halfway point. Next time they pass this red area is this candle. So we're going to need to add a halfway point. And it really isn't the end of the world if you do mark candles that are under these red candles. Like if you mark this one and this one, it's really not the end of the world. I just prefer to mark this a little more systematically and stick with the rules of, all right, well, if it's under a red candle, you shouldn't be marking it. So 139, 142, 144. Now we can continue on. There's another one here. Let's zoom in so you guys can see it. Mark that one, not this one. It's under a red candle. Do a halfway point just because the range is too long. And the psychological or just the thought process behind that is, you know, it really wouldn't be fair to say on the smaller time frames, it wouldn't be fair to say above 145 guys aim for 149. It's like, no, there's definitely a level in between. We just need to find it, you know, without making anything up. So that's the big thinking behind that. Continue on to the right. We're above current price, but it's just good to get some extra levels going. All right, we'll stop there. And then let's add a couple halfway points. But you really don't need to add this one. I just thought it was good. Remove. Remove. All right, now go down to the 5 minute. And you'll see we have levels everywhere. I probably could have added another halfway point here. If you ever see that, you don't have to go back out to the bigger time frame if you're like, oh, I don't like that this range is too big, you know, blah, blah, blah. Then just add it there. But make sure you go up, not down. Remove. And let's just do another one here because why not? So you can see you can do it on the smaller time frame too. It's not the end of the world. And if you want to, just to not confuse yourself, just extend it to the left so you don't have to worry about it. And now the only other levels, which you are all aware of, are the previous day open. So everything I just added up to this point, let me delete that. Everything I've added up to this point are bigger time frame levels that we use from price history to help us out on the smaller time frame. These can be breakout levels, stop losses, targets, breakout entry levels, you know, just everything. And now what I'm about to add are short-term levels from the previous day. So here's the previous day open, previous day close. You can add the previous day high. It's just a wick, but in that case, I wouldn't even bother adding it. Pre-market high is about 144.44. So there's a lot of levels here. So basically, at open, Apple had to potentially push through this resistance to make it to 145. They could not. And then the previous day low. And for anybody who's going to ask, if you have to ask, should I just add the wick or should I add the meat? Add both. What do I mean by that? So this is the true low of day, right? And this is the like lowest close that we have, right? Or open, I should say, since it's a green candle, not close like a red candle. But the lowest meat of it is what I'm trying to get at. Then add both. Why not, right? It's not the end of the world. Auto zoom back out and look over at how today had panned out, which today isn't really a good example because we have all these different news coming out. You have PAL, you have a bunch of earnings reports coming out, including Apple, Google, Amazon tomorrow. So that'll be definitely a big one to look out for. So today isn't a great example to go over levels, but as you can see, just to set up your current plan, you would be looking above this area for potential calls towards 145.11, or you'd be looking for this to reject and push down lower. First 10 minutes completely sold you off and just had an indecisive candle. They basically stuck between this range and then broke through the new low. The new low is right here, right? So you need to be looking for rising volume under that level. But like I said, today's not a great example to go through things. If you really want to back test, I would look over multiple days, not just this. So, and a way you can do that is just by re-adding those smaller time frame levels again. So if I really wanted to, I could just delete every level I just added. And then let's say I want to go back test another day. Well, then I just scroll over here and let's say I want to do this day. Well, I want to review this day, but I need to add the levels from this day. All right, well, here's the previous day high. Here's the previous day close. Previous day low is basically at a level. And if that's another rule, like you see right here how the yesterday's open was basically at a level. Well, I don't really need to add this level then. It's there. You know, no need to double up a level that's already there, right? So, and this can help you out review other bigger time frame breakouts right here, or smaller time frame breakouts, sorry, from here. So as you can see, we initially pushed lower. And what are the last two levels we had? The pre-market low and the pre-market high, which again is a level pretty much there. They end up opening, holding pre-market low, push higher. They get above some of the previous day levels and hold on top. Through the first 15 minutes, all you saw was a breakout, and then a retest that held a really good area. What is that 143.92? That's the previous day close, a very, very strong short-term time frame level. So what's the last ditch effort level that bulls need to break to continue breaking out? 144.25, right? Exactly. What ends up happening? They end up pushing it with rising volume. So you have lowering volume all throughout this move, which is just a good breakout and a hold of support. And then you have a rising volume breakout over the next two candles. Again, getting over both of those areas. So pretty much you should already be bullish. 9 EMA is probably curling under this. I'm not even going to turn it on, but 9 EMA is a really good short-term indicator to watch. And look where they end up holding. See how they kind of pushed up here, held as a reset, and then pushed through that 144.50s right here? Kind of the resistance of that first slowdown. Look where they end up holding later on. They end up holding right there and then continuing onwards towards the 147, which, in my humble opinion, you shouldn't ever be. Let's say it's above 145, and you've already been in down here, and 147 is your next level. Should this be where you sell? No. You should try to sell in between this range because this is very far again. So if you like 146s or you like that past this new high, you got a little bit of movement and then you take profit, awesome. You should never be sitting here going, damn, how could I buy at 144 and sell at 147? Not right now. Right now you need to be focused on getting in and selling at the first target for a while, right? So that was Apple. And how you could also, I did a little bit extra there so you could see like how you could back test and all kinds of stuff. But really all you're doing is telling the story of the chart, so. And I tell this with all my members in the chats, make sure you are telling the story of the chart so you get a better visualization of what's going on, what's possible, what can happen for bulls, what can happen for bears. Never sit here and just cover one side, never be non-biased, and always be open-minded for what's possible. Therefore, when something does happen that was kind of unexpected, it's not really slapping you in the face or you're taking a big loss or you're missing out on an opportunity. You're able to have it already thought out. So that's the big thing with these levels. But hopefully you guys enjoyed this video. I'm going to go do another one. We have a bunch of requests for other tickers, but please leave a like and comment on this video if you enjoy these, and maybe drop a ticker if you want me to do another one that on a ticker I have not done yet. But I'll see you guys in the next one.